Hello, everyone. Um, my name is Pharmacist Jacob. I'm a trained pharmacist and a forest trader. So I just want to introduce my new strategy that I found, and it has been working like magic. And it's very simple and straightforward. Nothing, to stress yourself about. The strategy is called ACC. ACC. A stands for aggressive move. C stands for correctional move, and the second C stand for continuation move. ACC. That's a simple strategy. It's called ACC. A stand for aggressive move, C stand for correctional move, and then the second C stand for continuation move. So all what we will be interested in is to trade the continuation move. You know, we are interested in placing our trade strategically at that continuation move. That's how simple this strategy is. So what I do normally, I go to daily time frame to look at the overall trend of the market because um, I trade market structure. I'm a price action trader. I follow the language of the market. What the market is telling me, that's what I follow. So I'm a price action trader. So the first thing that I'll be interested in is to look at the the trend of the market, is to check the trend of the market. So I go to daily time frame to see the overall trend of the market. But my point of interest is 4 hour, 1 hour, and then 30 minutes for entry. So I can just draw a trend line on the daily time frame just to give me an idea of the direction of the market, just to give me an idea of the direction of the market. So you can see in drawing trend line, that is going upward, you only need two trough. You only need what? Two trough. And we have one trough, we have another one here, we have another one here, we have so many of them, we have another one here, and we can see that the market has broken our trend line on the daily time frame and retraced and is going down aggressively. So you can see that, in such kind of movement, whenever you see a trend line is broken and retested, the next aggressive move will be so, it will be so much. Those are the move that when you catch, you know that you've catch, you know, so many pips. So let's go to 4 hour time frame. We go straight to 4 hour time frame to confirm the direction of the market. You can see obviously that the market has broken this our trend now on the daily time frame, retest it, and is aggressively going down. And you can see a chart pattern here. This is what we call double top chart pattern, the one I was trying to tell you guys from the previous video. I said double top has three patterns. You can see this one has shorter leg, the first one that has shorter leg, and the second leg is longer. There's one that can come as equal height, and there's one that the first leg is longer than the second leg. But this one, the first leg is shorter than the second leg, and this is a chart pattern, is a trend reversal chart pattern. It's a trend reversal chart pattern. So we have seen that the market obviously is going downward. We can draw trend line here from the top. Let's consider this one as the origin of our trend. Then we draw it downward. We can draw it downward. You can draw another trend line. Let it be the most recent from here. Let it touch. In drawing trend line, we only need two peak when it is a downtrend movement. If it is an uptrend movement, we need at least two trough, just at least two trough. It can be more than that, but we need at least two trough. So you can see on 4 hour time frame that the market is going down. So let's go to 1 hour time frame, and this is on GPP JPY, Japanese Great Britain pound versus Japanese yen. So on 1 hour time frame, we can obviously see that the market has, we have another minor chart pattern here, which is double top. and you can see that the market is aggressively going down. So let's go to 15 minutes time frame to look for entry. 15 minutes time frame to look for entry. Now the ACC is all about aggressive move, correctional move, and continuation move. Aggressive move, correctional move, and continuation move. Now let's see whether we can draw trend line on the 15 minutes time frame here. 15 minutes time frame, and draw a trend line on the 15 minutes time frame. 15 minutes time frame. Draw trend line on the 15 minutes time frame. And obviously see that the market is going down. 15 minutes time frame. The market is on a downward movement. So which one is the aggressive move now? You can see this is because the market is going down. This aggressive move, this correctional move, this continuation move up to this level. So this one can also be referred to as the aggressive move. So a correctional move might touch this our trend line before the continuation move. So this one is our aggressive move. This one here is our aggressive move. This is our aggressive move, and this is a correctional move. Then we strategize. So this is the aggressive move here. This is a correctional move, and then we will target to what? We will target to position here and target this level. So this is our point of interest, this level. This is where we are going to trade the correctional move. So our trade, we are going to place our trade here. We are going to place our trade here. We are going to place our trade here. And then our stop loss will be slightly above. Maybe we can put our stop loss here. Can put our stop loss here. Can put our stop loss, and then our target will be here. We'll be targeting here. So this is our target. So this is our aggressive move, this is our correctional move, and this is a continuation move. So we are interested in trading the continuation. We will sit on our arms to patiently wait for the correctional. Now we have seen that this is aggressive. This is the highest level the market has gotten to, and this will be our take profit. This point here will be our take profit. So we'll sit down on our arms and wait patiently for correctional move to happen. Then we can now place our entry from here to place our short position from here. That short, when I say short, I mean sell. Place it here and target here. And like I said earlier, for before we place any trade, we must make sure that the our entry point, the distance between our entry point, our stop loss is at least short. Let it not be more than 20 pips. And then it should be able to give us at least 1:2 risk to reward. 1:2 risk to reward before we place any trade. It should be able to give us at least 1:2 risk to reward. If our risk to reward is not giving us at least 1:2, we ignore that trade. And then the distance between where our entry is and then where we are placing our stop loss should not be too far. At least it should be around 20 pips, you know, so that if the market happens to turn against us, we are not going to lose much. So, like I said, my strategy is ACC. A stands for aggressive move, C stands for correctional move, and then the one we are interested in trading is the continuation move. I will be targeting where the market has previously gotten to. It's as simple as that. So please, if today is your first time coming across my video, kindly subscribe, like it, share it, so that whenever I release such free content like this, very educative one, YouTube can always recommend it to you and to as many people that need to see this as possible. See, trading should not be that difficult. Strategy should be so simple so that even a child can be able to do it. You know, it shouldn't be that difficult. All what you need to work on is your psychology, and then you work on your risk management. But strategy should be something that is very simple and straightforward. So I'm giving you my strategy. It's called ACC. A stands for aggressive move, C stands for correctional move, and the one we'll be interested in placing in the trade is continuation move. Thank you. I hope you have gotten value from my video. Thank you and God bless you. Have a pleasant day ahead. Bye.